Right. We can start. I think we've got a good crowd to start the session. Good morning, everyone. A warm welcome to all of you to this webinar, KSA e-invoicing, that we've jointly organized with Cygnet as our implementation partner. My name is Deepa Agarwal. I'm an associate partner with WTS Dhruva based out of Dubai, and I'll be the moderator for this webinar. Considering that KSA is looking at implementing e-invoicing in a phased manner, and the phase 1 starts on 4th December this year, with less than 3 months, I'm sure most of you would have somewhere started implementing at least the phase 1. Now, with that background, if you can move to the next slide, please.
Akash, can we move to the next slide, please?
Yes. Sorry for the technical glitch. Yes. So, with that background, I thought, what we plan to do is in the next 40-45 minutes is just take an overview around what's the whole e-invoicing look like. We'll kind of spend some 10 minutes around what are the challenges, what we perceive in phase 1, followed by a 25 to a 30 minutes session where we look at how could businesses meet these challenges, and Cygnet as our partners have really developed a proprietary solution around implementing a compliance efficient solution for KSA e-invoicing. Right, and finally, if time permits, we'll have some Q&A. Some housekeeping rules. If you are facing any technical difficulty, please feel free to drop a message on the chat box and our technical team will get in touch with you. If you have any questions, please post it on the chat box and we'll try to address it at the end of this session. And just for your information, the webinar is recorded and we'll be happy to share the recording at the end of the session. In terms of the team today, I'll be moderating the session, as I mentioned. Geet Shah is a director with WTS Dhruva. He'll be kind of talking around the overview and the challenges from a VAT perspective. Neeraj Hathi Singh, who's the founder and director of Cygnet Infotech, along with Akash Chopra, who's a product manager with Cygnet, will be taking us through the actual technical requirement and potentially what challenges one could face, both phase 1 and phase 2 from an IT implementation perspective. Right. As we move to the next slide, I'm sure you would agree the tax landscape in Middle East and more particularly in GCC has been ever evolving. And with the introduction of VAT in 2018 and 2019, again, there is a lot of discussion around BEPS 2.0, Pillar 1, Pillar 2, corporate tax, minimum corporate tax at the rate of 15%. There's a lot of, momentum in the tax arena itself. So from that perspective, even the government is kind of looking to invest heavily from a technology perspective. That's where, e-invoicing really comes into the fore. And I'm sure some of you would be aware the idea behind e-invoicing is multifold. So it is to look at digitally transforming a business or the government. It could look at ensuring there's no tax evasion, elimination of parallel black economy, giving equal opportunities to businesses. Again, more from a tax control perspective also. Again, Middle East or GCC is not the first region that is implementing VAT. There are regions, there are countries that have already gone ahead. For instance, Japan, Taiwan, China, very recently India. These are countries which have already implemented e-invoicing. So from that perspective, our partner Cygnet really bring in a lot of value because they've really handled these projects in these countries. And now if you look at e-invoicing from a Middle East perspective, Egypt was the first country that introduced e-invoicing, and it made it it started in November 2020, which is when this specific 134 country companies were kind of mandated to implement it. But what is expected is starting January 2022, all taxpayers will be mandated to implement e-invoicing, and to the effect that the law will not allow you to claim input tax based on paper invoices. KSA, again, as I said, it's a phased approach, and I'm sure Geet will speak more around it. But the deadlines, is it's 4th December 2021, and then in a phased manner again starting 1st January 2023. UAE, again, what we've seen is UAE typically kind of has been a follower in terms of the implementation of technology, and in terms of our understanding of how the FTA has been moving ahead on technology, there has been a preparation happening internally on the tech architecture. And I wouldn't really be surprised if we see the announcement on e-invoicing in the very near future in UAE. Qatar, again, it does not have VAT. I'm sure it should get introduced in a year or two, but it has other taxes. So what we've understood is Qatar has already introduced a digital tax platform with Sept as the base technology, and therefore I do not see any reason why Qatar will not implement e-invoicing from day one. Now, with that, I would request my colleague Guy to kind of through the overview and the challenges that we've come across in terms of implementing e-invoicing. Guy, over to you.
Thank you, Deepak. Thank you, Deepak, for the introduction and setting up the stage. Just a second, I'll move to the next slide. Yeah. So, hello everyone, and welcome to the webinar. As Deepak mentioned, e-invoice as a tax compliance is gradually picking up in the Middle East, and one of the main reasons for the introduction is to reduce underreporting and fraud. Now, in most countries, e-invoicing is focused on B2B supplies. However, KSA is implementing a hybrid model whereby it will be applicable for both B2B and B2C invoices. I'm sure by now most of you would have attended a ZK workshop on this subject. However, just to recap and bring more clarity, I'll talk about the e-invoicing framework in phase 1 and phase 2 and the key challenges that could be faced by the companies during implementation. Now, the first phase of invoicing is the generation phase, where all the companies, irrespective of the turnover, are expected to raise an invoice through a e-invoicing software and discontinue raising a manual or a paper book invoices. In the phase 1, will be implemented from 4th of December, as Deepak mentioned. Now, some of you might wonder why such an odd date, and the reason behind that is that the invoicing regulation was first introduced on 4th of December 2020, and it becomes effective after 12 months, and therefore the date is the 4th of December 2021. Now, in terms of the flow, the supplier will be required to generate an e-invoice and has to share it with the customer. Now, either by taking a print or by email. In case of a B2B, life remains as is, except for the fact that invoice needs to be raised with an e-invoicing software. For B2C supplies, simplified tax invoice needs to be raised with a QR code as an additional requirement. The customer should be able to scan the QR code and get the basic information about the supplier, the time and date of raising an invoice, and should contain the invoice details such as the invoice amount and the VAT amount. Companies will be required to archive the invoice data in a local server in KSA or in a cloud server. The invoices are to be stored in an electronic format. Currently, there is no clarity on what do they mean by electronic format, but most companies are advised to save the invoice data in an XML file as what is expected in phase 2. Now, if I in the next slide, please. Yeah, so for B2B supplies, again, in phase 2, there could be 2 models of invoicing. It will be implemented in batches starting from 1st of January 2023. As we have seen in Egypt, they have first introduced it for large taxpayers and then for all the other taxpayers. Similarly, in KSA, we will have the implementation in batches, first for the large taxpayers and then for all other taxpayers. For B2B supplies, there is an integration model, and for B2C supplies, there will be a reporting model. The invoice generated for B2B supply will have to go through a ZK platform. The invoicing software that is being managed by the company has to be integrated with a ZK platform through an API. Once the invoice is approved by the platform, the invoice will be sent back to the supplier, which then can be later shared with the buyer. And all the invoices have to be archived in a server, as we discussed earlier. Now for B2C, there is a reporting model whereby a simplified invoice will continue to be raised with a QR code with a few additional information. Now here the catch is that Zatka will ask companies to upload the B2C invoices in an XML file into their platform. So Zatka will have a full clarity or reporting on the B2B supplies and the B2C supplies being made by a particular company. Now, in terms of the QR code, it will be mandatory for both B2B and B2C invoices to have a QR code. It should have basic information about the seller and the invoice details about such as invoice amount and the VAT amount. Apart from this, there has to be a hash of XML file, a cryptographic stamp, and a UUID. These are technical terms, and I'm sure Akash will take you through and explain what are these technical terms. But as of now, these are the particulars that needs to be there in a QR code. The invoice data which is generated has to be stored in an XML file or a PDF or a A3 file with a embedded XML as a record. Now let's move to the next. Now before we move to this, I'd like to have a poll on a particular on these two phases. If Kesha, if you can. Yeah. So in terms of, would like to get a poll on whether input tax can be recovered on a simplified invoice after 4th of December 2021. If audience can give their opinion on this particular question.
Yeah, maybe we could just end the poll, Geet.
Yeah. So the answer to, so most of you have answered that yes, input tax should be available as on the simplified tax invoice. This is tricky, and I'll discuss more about this in my subsequent slides. So first I'll talk about the invoice sequence series. So one of the key challenges in phase 1 is the invoice sequence. Now the current business practice in most companies is using a multiple invoice series across locations, ERP and billing softwares. Now under e-invoicing regime, companies may have to use only a single invoice, either at each location or at each billing software, irrespective of the number of users using the POS billing software. Now let's take an example of a supermarket. Now if a supermarket in a one location has a one software with 10 users, then it is likely that one invoice series has to be used across the 10 POS systems, and that needs to be followed at each location. Now we are still seeking more clarity from the Zatka on this particular issue, but it is most likely that a company will be required to follow one invoice sequence per software at each for this particular compliance. Now if I go to the next slide. Next slide, please, Keshav. Yes, so on the input tax recovery, so currently the business practice is that input tax is recovered either based on a standard invoice or based on a simplified tax invoice. And as per the law, company is entitled to recover input tax even on a simplified invoice. However, in the e-invoicing regime, this could change because what is indicated in a detailed guideline issued by the e-invoice on invoicing by Zatka, that B2C invoices are particularly to be used only for to be issued only for the end consumers and not for the B2B customers. And therefore, going forward, it could be possible that a simplified tax invoice could only be used for a B2C supply and a standard tax invoice to be used for B2B supply, because as a way forward in the integration phase, what Zatka is looking at is that whatever the sales has been reported by the supplier has to be then matched with the purchases by the recipient, and therefore this integration comes into play. And if there is a simplified tax invoice, then the the recipient's tax details are not captured in a simplified tax invoice, and therefore it is quite likely that input tax recovery will only be possible with a standard invoice.
So, Geet, if I may come in here, so what I understand from you is basically businesses going forward will have to insist on a full tax invoice rather than a simplified tax invoice, and it's up to the vendor now whether his system is capable of issuing those full invoices for supplies those are below 1,000 Saudi riyals, right?
True. And currently, what is happening, Deepak, is that in most supermarkets, we have seen that the store reprints the simplified tax invoice. Now, this may not be possible. Now, whenever a customer insists on a standard invoice, they have to direct it to a particular counter for getting a standard invoice raised with the details of the recipient, the TRN details, and all of that, and to recover the input tax on a particular invoice. So it is going to be a challenging one. Yes. Yes, Neeraj.
Pointer from my side is that this is going to be technically extremely challenging at the POS systems, because if they do not implement a centralized system, then kind of a converting a simple invoice or a B2C invoice into B2B is going to be very difficult. And as per the ZCA guidelines, and if I understand correctly, it is not required that you need to issue a B2C invoice only to a certain value. It's like if for a POS system or for a kind of thing, you can go even for a higher value amount, even if it's a B2C system. But for a POS system to issue this and keeping the kind of a sequencing in kind of mind and not being able to change the invoice, it's going to be a very, very challenging thing. And this is a very challenging technical question that needs to be addressed properly at a centralized system. That is what our understanding and our discussions with multiple large retailers has been.
Correct, Neeraj. So moving to the next slide. So another challenge that we could foresee was on the modification of invoices. Currently, what is happening is that businesses can modify or cancel or delete the invoice which is raised. But in the e-invoicing regime, this may not be possible. Each invoice cancellation or a modification has to be through a credit note to ensure that the reporting is done correctly. So everything has to be through a credit note, and any modification has to be through a credit note. So this is going to be a big challenge, and companies need to put controls in place to ensure that this is being followed. Next slide, please. This is the biggest challenge that we could foresee on month-end closing and JV entries. Now, generally what happens is that companies have a window of first week open for passing the month-end and JV entries, which impacts the VAT liability of a particular company. And companies generally keep the books open till the first week of next month. Now, with a single invoice series, this may not be possible under the e-invoicing regime. Companies have to either keep the books open and not raise new invoices in the next month, or have a hard close and ensure that the sequence is followed. So this is going to be the biggest challenge that we could foresee for companies in closing their month-end books and for MIS reporting. Moving to the next question on advance payment and deemed supply. So currently what is happening is that most of the companies manually discharge VAT obligation on their advance payments and on the deemed supplies which are made to for the free gifts which are given to employees or to their customers. Now, under the e-invoicing, the detailed guidelines suggest that every supply has to be there, invoice has to be there as a supporting. So for every advance payments, invoice has to be generated. Now, companies have to fix their AR modules to see how invoice can be generated for advance payments, and at the same time ensure that the amount which is received is not recognized as a revenue. So this is going to be another big challenge on raising an e-invoice for advance receipts and for deemed supply. Now, moving to the next challenge is on the employee recoveries and deductions. So currently what is happening is most of the companies are paying VAT on the employee recoveries or deductions manually and pay the tax at the time of filing of returns. Similarly, for employee discounts in KSA, employee discount is to be ignored and VAT has to be paid on the gross value. What is being done currently is that most of the companies at the time of filing returns, they calculate the VAT liability on the employee discounts manually. Now, under the e-invoicing, for every employee recovery or a deduction, there has to be an e-invoice. So this is going to be another challenge that companies have to face. And on the employee discounts, even there the discount has to be treated as a tender and ensure that the VAT is calculated on the gross value. So this is something that needs to be taken care of in the invoicing regime. Now moving to the next slide, please. So I'll now hand over to Akash to discuss more on the technical aspects and what are the challenges that could be faced by the companies in phase 2 as part of the implementation.
Thanks, Geet. Thanks for the introduction. Good morning, everyone. So now we have seen that what all business challenges or the tax position challenges this e-invoice is going to bring to your corporations and your operations. But it's not just limited to those business operation or tax positions. The e-invoicing has a quite big impact on the IT infrastructure side of your POS and ERPs as well. Now we will talk about some of these challenges going ahead, but before we could jump onto that, I'll quickly want to ask you a question around the QR code generation. So I'm just launching a poll. Kindly provide your feedback. I must say the QR code generation is going to be the most critical aspect as far as the phase 1 implementation goes. So I hope most of your POS systems are either ready or you have understood that part. I'll be closing the poll in next 5 to 10 seconds. All right. So thank you all for sharing the feedback, but it looks like almost 70% of you have said that the PO system that is being installed or being used by your IT systems are not capable of generating the QR code, and I would say 30% of you are ready. So that's a good thing for those 30% of the attendees here. Now I'll talk about, it's not just limited to the QR code, but the overall implication of the phase 1 in general.
I just wanted to add a couple of points on the QR code side. Like for the people who are already ready in terms of being able to generate the QR code, a very important technical aspect needs to be thought through, that the QR code is not readable. It's like the generated QR code should not be readable into a normal format. They have given a very specific requirement that it has to be readable in a TLV format. Now that thing in a lot of clients that we have discussed, a lot of people that we have discussed with have missed out onto it. So this is a kind of a very important thing that go through the specifications in a kind of detail, and you will get clarity in how the QR code has to be generated. So that is important for people to know. And it's just not simply that QR code generation is not enough, because the sequencing aspect has to be taken care into the entire process, and how you will take care of the phase 1 as well as the phase 2, because many of the clients that I have discussed are looking at phase 1 in isolation to phase 2. This is going to be a very challenging going further, because a lot of requirements in phase 1 are a small subset of what is going to come into phase 2. So not to look phase 1 in isolation is important. That is one thing. Second thing is the format of the QR code and the technicalities around it should be kind of understood in detail. These are the 2 pointers from my side. Yes, Akash, please continue.
Yeah. I think very rightly highlighted by Neeraj here. So this QR code needs to be encoded in a TLV format. So all the 5 fields which are required to be part of the QR code in phase 1 should be encoded in a TLV, and probably Gazette might come up with a mobile app or some other service using which the buyers could scan that QR code. So that's an important note on the QR code. Now, as rightly mentioned by Neeraj, there are 3 critical prohibited functions for the phase 1. We'll talk about that first and then about the regular aspects of the phase 1, because the other things are pretty much there if you are using a ERP or a POS, and most of the invoices nowadays are already in an electronic format. But the challenge that comes up with the prohibited functions is the tampering of the invoices, your credit notes, or even your logs. So any system that you are using currently to generate the invoices should not have any capability to the user where they can go back and modify an invoice that is generated. This applies to your AR invoices only. Just be aware of that the invoicing overall applies to your sales invoices only. So there could be possibility that the invoice you are recording for your payable part, you might have to change it if there's a manual error in actually recording the invoice. But all your AR invoices, which are your supply invoices, once they are entered into the system, you will not be able to cancel them. You will have to either net off with a credit note or modify using a debit note. And same goes for the logs. So if your e-invoicing system, if your ERP or your POS is not having proper audit trail and audit logs, it will not be considered as a compliant software. So that's another very important requirement there. And talking about sequencing, there has been a lot of confusion around the overall sequencing requirement. And there is yet to be, we are yet to receive more information from Gazette onto the particular way. But as a conservative approach, what we recommend all our corporates who are talking to us is that having a central system which could manage the sequencing of all their invoices could solve a potential challenge and keep them at a safer approach rather than taking a riskier approach by going with a different sequencing at each POS terminal or each branches. So those are the prohibited functions. Now, what are the basic things that you need to comply on the phase 1 side? So local archival. Now, most of the POS systems that you use not having any local archival capabilities. Either those are integrated with an ERP or they are integrated to a data warehouse. But in both of those cases, the terminal from where the e-invoice is getting generated, there should be a capability to locally archive the data. What it means is that the data should be exported into a folder from where anyone can access it, including Gazette, in case needed, as well as the data field validations. So far, Gazette did not have any requirement on the data fields that you need to maintain and to them in the VAT regulation, because you were only supposed to submit a summary VAT return. But since going forward, all the transactions are going to flow to Gazette in phase 2. They have started asking or having the implementation on the data field aspect. So right from phase 1, there are around 50 to 60 fields which are mandatory to be stored for both B2C as well as B2B invoices. While when the phase 2 will be completely implemented, the fields rise to almost around 116. So that are the number of fields that as a business you need to either mandatorily maintain or conditionally, depending on the type of business you are doing. So that's another critical aspect that your IT and as well as your tax teams will have to work into together and figure it out a way of recording and validating those things. And there are solutions in the market which can help you validate those data and keep it in check so your compliances are being followed. Tampering proof, we have already discussed that it is a prohibited function. And lastly is the audit log. Again, I have mentioned that each of your systems should be having an audit log in place. And as Neeraj rightly highlighted, that looking at phase 1 in isolation is not going to solve a long-term challenge. This whole implementation is in a combination. So looking at phase 1 and phase 2 as a combined project, as a single unit of implementation and a business process automation should be considered. And for the same reason, we are also talking about the technical things that need to be taken care of when the phase 2 comes into place. So the first and foremost thing that is very critical is the XML data generation or the XML format generation. So all the invoices and all the records that you generate in your system should be converted to an XML format. Now, most of you would not even know what an XML is. but it is a markup language which is only understood by, let's say, a software program. And this is going to be used by Gazette to have your data inserted into their software or inserted into their platform. So that's why all the data that you are having right now in your ERP or POS, currently it would be either in an Excel or a CSV format, but that also needs to be into an XML. Also, we recommend.
Akash, sorry to interrupt, but I would want Geet and Deepak also to touch base during this solution, one particular aspect, which has come into multiple client questions. That one is, we will be storing the invoicing data, we'll be storing the B2C invoices or the simple invoices into it. We'll have our B2B invoices being generated into an electronic format. But the total of these invoices and total of what we file into a VAT return kind of vary different because of different aspects around it. Because we may be taking some exemptions, we may be kind of following certain rules. But the VAT return value and the invoicing total that we kind of generate from our sales would be varying. So how important it is to have a kind of a very high quality reconciliation ready into between my VAT returns and between my invoicing amount. How important it is. This is something I will want Deepak and Geet to touch base during the once either through the question answers or any other point during this webinar. Yes,
Sure,
yeah, I think that's one of the key challenges that we have discussed with our corporates so far, right? So we are talking about the XML generation of the data, a very technical thing. But along with that XML generation, the sellers needs to also generate a UUID number. Now, UUID number is a unique number in the universe, and it would be the unique identifier of the invoice that is going to be generated from your system. So when phase 2 comes into picture, not just your B2B invoices, but your B2C invoices will also need to have a UUID number. So we highly recommend that there needs to be a centralized solution which can help you generate all of these numbers. And that's why we are talking that, okay, phase 1 and phase 2 should be looked into conjunction. Because all of these requirements, especially the UUID, is going to bring in a lot of challenges for the B2C invoice generation, the simplified invoice generation. Now the QR code which is printed on these invoices will also need to have the XML hash and the UUID as a part of the data that is being stored into the QR code. So that's another area of the upgrade. But since in phase 1 we are already going to generate the QR code, this will only be just adding few more fields to it. But the fields which are going to be added are going to become be the key implementation challenge for your IT teams, and that's why we recommended a central system. So the fields which we talk about is the cryptographic stamp. So cryptographic stamp will be a digital signature which you need to imprint on each and every invoice, and it is going to be unique per invoice because the data onto the invoice needs to be part of that signature, as well as each of the seller needs to get a public certificate and a public key from the Gazette using which they could generate that signature. So that stamp will also need to be printed on each and every invoice. And along with it, lastly, once all of this data is generated, the system should also create a hash of all these XML data. So what is hash, if you may ask? In simple terms, it is encrypting a data into a format which is only readable by a particular software. Plus, it is something which is used for blockchains as well. So blockchain network relies on hash of data to ensure the authenticity of a particular data as such. So if you change anything on in the data, the hash changes. So depending on a particular value of a hash, anybody is able to determine whether the data is tampered or the data is authentic. So that's why authorities are going ahead with a hash of the data in the implementation. And all of this information, including the hash, the UUID, and the XML, will be required to be submitted to the Gazette. Now, how the submission would happen, it will not be a manual import or a manual upload of file. It will be only through a secure encrypted channel of API. API is application program interface, and it relies on how our mobile app softwares work. So using that interface, the data will be pushed onto the Gazette platform, and they will validate or clear the invoice. as Geet had highlighted in the phase 2 implementation. For B2B, it will be quite a challenge because right from where the invoice gets generated, it will be real-time push onto the Gazette platform. So until and unless you get a clearance from the Gazette, you won't be able to issue the invoice to your buyer. So that's where you need to ensure that the real-time integration as well as the platforms that you're going ahead for your e-invoicing solution are capable enough of managing large volumes, managing real-time, have good response times, as well as have experience with integrating with large governments APIs. And for the B2C invoices as such, for that the integration won't be real-time, but it will be on a batch mode, probably in a 24 hours or maybe whatever time frame Gazette will share across with the taxpayers. In that case, you also need to ensure that the data is validated beforehand, because the invoice is already handed over to the buyer, and at a later stage, you are pushing the data to Gazette. So in case there is any error into the data, it will be quite a challenge for you to go and do the credit note generation and issue a new invoice, because buyer has already left your store. So you cannot depend on the data validation to be done at a later stage. So even for B2C invoices, we recommend real-time integration with some systems so that the data is validated, the QR code is managed, as well as whenever Gazette is required of the data, it can be pushed on a real-time or on a batch mode. So I think that's more or less on the technical aspects for the phase 1 and phase 2. Now we will talk about, these were more on the challenges that or the changes that are required into your IT infrastructure and into your tech stack architecture landscape as such. As Cygnet Infotech, we have experience of working with in India GST softwares and India GST provider for over a long period. And through this experience, we have built a platform which is flexible and scalable to handle the integration with the authorities, as well as integrate with the POS and the ERP softwares as such. So we'll quickly show you how a particular ideal landscape of your tech stack architecture should look like once you have implemented a centralized system which takes care of your e-invoicing needs. So when in particularly we talk about, let's say for a short-term goal, which is phase 1, though the solution that we are providing will be future-proof, but just for the simplicity of the explanation, I'll first explain how the phase 1 integration would happen. So here we can see that there will be a central system, which we call a compliance platform, and it will be handling your e-invoicing compliances as a whole. And that system has got web APIs and a lot of other integration right out of the box, so that it easily integrates with the POS terminals and the POS software that you have, as well as the ERP systems that you have in place. So at a moment when any invoice is getting generated at a POS terminal through an enriched API, the data is pushed onto the central platform. And this platform can help you do all the compliances. When I say all the compliances, it will generate the QR code, it will generate a unique sequence number, and it will provide that as a response to the POS system. Our system also has got XML generation into place, which is going to come into phase 2. But since it has a capability, we will also generate and store the XML of the data right from phase 1. So in case going future, authorities require a backdated data in an XML format, it is there with you to be submitted. Now this QR code and the unique sequence which is generated by this platform or a central system will be given back to your POS systems in real time. When I say real time, the overall operation is finished in less than 500 milliseconds. So when a customer is standing at your POS terminal and the user is generating the invoice, it would not add up more than 1 second into the overall operation of the data being pushed onto the central system, and then your POS terminal getting the QR code back and printing it on the invoice. So that's the overall infrastructure that we recommend. In case you have your POS terminals are not able to connect to internet, then we would still recommend that we have some element of the software deployed onto your branches. So at each and every branch of yours, there will be a singular platform or a central platform, which can help you generate those QR codes and etc. But in those cases, the sequencing can only be ensured at a branch level, not at an organization level, because those systems are not connected to a central platform, but they are branches working as individual entities. So that's an overall implementation or the tech stack architecture landscape for phase 1. For phase 2, what we recommend is same system. Nothing needs to change from an implementation standpoint. So our system will be upgraded and enhanced to have the additional capabilities which are required to be compliant for phase 2. So right from the technical aspects that we discussed, the XML generation, the UUID generation, which is a unique number universally, as well as the cryptographic stamp. And lastly, the hash of the XML, which is again encrypted data. All of these things will be generated by this singular platform, a central system. And the integration with the POS and ERP stays as is. So if you understand this from a corporate standpoint, it is a very safe approach. The reason being, once the integration is done, when the phase 2 go live, there is not going to change much because the same system is there, the integration is already there, the data is flowing. It's just that there are some additional fields which are added to the overall compliance platform. And the same platform also connects with the Gazette through the secure channels, and it submits the data to Gazette and brings back the acknowledgement, which is then given back to your ERP. So if you recall, for B2B invoices, you need to have the Gazette acknowledgement and Gazette clearance in real time. So this system can help you have that right from the ERP. The data comes to this central system. It validates, it generates all the required data, sends it to Gazette, and brings back the acknowledgement and gives you into the ERP. And then from there, you can either send that invoice to your buyer and so forth. So that's the overall solution that we suggest for a complete e-invoicing solution. Let's not call it phase 1 or phase 2. It's a complete e-invoicing solution for the current compliance requirement. Now, this was more about how the solution should function or what we recommend as overall tech stack landscape. But when should you start working on such project or such a compliance implementation? To be precise, now, I would say, because ideally we recommend that there should be at least 3 to 4 weeks kept for the UAT of such a system, which is a business critical application. It is going to impact the way the invoices are getting generated. So we highly recommend that the whole month of November should be given just for the UAT and the testing of the system. So if you plan backwards, that leaves you hardly with 4 to 6 weeks of implementation time frame if we talk about September and October month in general. And we recommend that at least 6 to 8 weeks should be kept for the integration and the implementation. So in a whole, we need at least 12 weeks, but we are right neck to neck at the moment. So a quick decision is required at every front, at the IT teams as well as at the business teams, to look for such solutions and start the discussion around upgrading your tech stack landscape such that when the phase 2 is implemented, or even when the phase 1 is implemented, you are ready and compliant from day 1 and not having any business impact of this e-invoicing. The things that you should keep in mind is ensuring that the business team is always involved in the scoping, as well as the cross-function coordination is in place and the user trainings are happening correctly. And lastly, always have a plan B, because this is a business critical application, as I explained. So having a plan B will always help you. And our solution always helps you do that. The reason being, we are working with large organizations, and we have always kept into our application, there is a disaster recovery and other development requirements kept into place from day 1 only. So now enough of discussion around the overall compliance solution and the planning. Now let's have a look at the actual software that we have prepared or that we have in place, and see how on 4th of December, when the things go live, how it is going to function, or how a centralized system can help you comply. Kesha, I would need to share my screen. Can you give me the presenter rights, please? I hope my screen is visible. Yes, it is. Just give me 1 minute. I'll quickly log into our platform. I'll quickly show you how the overall data goes from one point to the other point. And so into the system, right now what I'm showing you is how a document gets imported into our platform. This is a real-time data. So a text document, which is an invoice or a credit note or debit note, gets imported into the system. Our system creates a copy of that particular data and then pushes the data to the respective government authorities. And right from that, it also updates the statistics which are required to be maintained as a part of the compliance, as well as from the response of the government, it sends the notification back to the ERPs. And all of these activities or tasks are being tracked in real time. And if any of these actions are failing at any point in time, those are also being highlighted to the respective authorities. So ideally what would happen is, if this whole integration is happening on an end-to-end basis, and while the invoices are flowing from your ERP to our system, and from there to the government portal, at any point on flow, if anything fails, your IT team as well as the respective persons are being notified, and then the corrective actions can be taken. So any business which is impacted through this, we can have the plan B in place, as well as if there is a downtime from the government side, we can see it clearly that this thing is not working or anything is failing because of the compliance or because of the API issue from the government's endpoint. I think that's more or less it from the technical part of how the invoicing is going to work and how our solution can help you work onto those side. Now I'll ask Deepak and Neeraj sir to probably take things forward and if take some questions if we have the time available. I think they've got a few questions.
Sure. Thanks, Akash. Thank you so much. That was really insightful, and I'm still struggling with some of the, summarized words that you use, UUID and whatnot. So I'm sure there's a lot of work that needs to be done by a lot of companies, and especially, the poll question that we had initially. I was a bit surprised that 70% of people still do not have a QR code on their invoice. And I'm again, a bit skeptical that even with the balance 30%, the point having a TLV right? Encoded QR code is something that needs to be looked at by most of the companies that really need to implement e-invoicing in KSA. So
just add to that, sorry to add to that, most of the POS players or the ERP and they will be able to provide the phase one very easily to an extent because they are already into the system. They will be do that. But when it comes to the even discussion around the phase two, it is going to be very challenging because it's a very unique system that the ZK has come up with. And that is something which is quite different than the other systems around it. And lot of security aspects, encryptions, and technical aspects need to be taken care into the phase two. So looking at phase one and phase two in isolation is going to be very challenging. And it's important that whoever you like the companies work with have a strategy around phase one and phase two both.
I agree, Neeraj. Right. So we have a question here in terms of whether the invoices need to be, sorry, not invoices, QR code, I believe, should be in Arabic or English. Geet, you want to pick that up?
Yes, okay. QR code can be in English if I'm not wrong, but there is no requirement to have it in Arabic. But yeah, the details has to be there mentioned in the QR code.
Sure.
And it has to be encrypted into the TLB format. So that is an additional requirement. So QR code can be into either of.
Right. The next question is how and whether e-invoice is applied to exports.
Yeah.
I think this should be straightforward, right, Geet?
Yes. Yes, yeah. E-invoice is applicable for exports. So any taxable supply being made, an invoice will have to be generated. Only exception being the exempt supply. So only in case of an exempt supply, invoice may not be required. For all other cases, yes, the invoice will be required.
Right. The another one, it says, can you just elaborate on self-billed invoices?
So self-billed invoices is same as what we. So if a buyer raises an invoice or a agent raises an invoice, that self-billed invoice has to be kept and has to be kept as a record. There is no particular exception or a different treatment for that. It has to be an e-invoice that needs to be generated for any of the self-billed invoices. That's a condition.
And I think the details around how will it actually work in process is something we are awaiting from ZK, right, Neeraj?
Yes, that is something we are working. But Geet, to make this self-invoicing question a little bit more complex for you, that in the self-invoicing invoices, there are two parts to it. One for which we may be taking the credit of it, and one for which we will not be taking because they are exempted. So where do you treat them, in the simple invoices or into the taxable invoices, which would be treated? And if it is treated into the simple invoice, then the QR code printing on them also is required at this point of time or not? This is also a question which had come to me and I had no answer around it as on today.
Yeah, I think
right. I'm sure, Neeraj, we'll have a lot of such questions where we'll just have to move along as we kind of look at implementing e-invoicing for various clients.
Yes.
Right. Maybe another one. It says, how about exempt supplies outside KSA which qualify for zero rating? Is e-invoicing required?
Yes, for any zero rating supply, invoice will be required.
Okay.
I think for just to add, the out of scope transactions are not required to be part of e-invoicing, right?
True.
Just for the sake of everyone's understanding.
Exempt supplies and out of scope, both are not covered under the e-invoicing, and all the other taxable supplies, zero rating supplies will be covered as part of e-invoice.
Okay. Right. We've got a lot of questions around, the sequencing, the invoice numbers being in a sequential manner at a POS or at a company level. And I think Akash did mention it in a bit of detail, in the sense on the face of it, it appears that the invoicing number is the number which appears on the invoice. But there was, I believe, Akash, we discussed earlier before this webinar, that there is an FAQ which really kind of made this question a bit more complex by saying that it is not the invoice reference number, but it is the system generated number that needs to be kind of unique and sequential, right?
Yes.
Yes, Deepak. So
we had a little bit of complexity into the whole.
Right. I think that really brings us to the end of our session. And thank you, Geet, Neeraj, Akash, for the insights that you really brought from a challenge perspective, not just VAT, and especially from a systems perspective. And I'm sure a lot of our audience is left with a lot of thoughts and questions. The team will be really happy to kind of respond to those questions. Just feel free to drop us an email. My final remarks from my end, the way I look at it is, 2 or 3 points. Akash did use these terms, business critical, the timelines. I believe business critical will be very important because the whole so B2B especially, where, the input tax is really dependent on a correct e-invoice. Right. So if that thing does not happen, really, the customer will not be able to claim input tax, right, till you get the correct invoice, and that could happen to you as well. So therefore, it's very important that it's just not you, but your vendors and customers are also kind of educated and brought to speed in terms of implementing e-invoicing in their business. The other is timelines. Obviously, again, going back to the poll, 70% still kind of looking at the QR code, and considering that we are just 4 to 6 weeks till November, where we kind of look at having a UAT to ensure that the system is up and running on 4th December. And last point, I think Neeraj also did emphasize a lot on this, and I also feel it's very critical that you look at e-invoicing implementation as a whole. Phase 1 is pretty straightforward, I believe. And I believe, if you look at it separately as phase 1, phase 2, we may end up in phase 2 with certain challenges, which will lead to us not just on your systems, but also from a cost perspective. Right, Neeraj, I'm sure, you could emphasize more on this, and really it could impact your cost, the timelines, the way you want to implement, and obviously the end is non-compliance with the KSA authorities. So, that's all from our end. Thank you so much for attending this webinar. And as I said, please feel free to get in touch with us. We'll be happy to address all your queries. And we hope to see you again. Thank you so much.
Thank you.
Thank you so much.
Thank you, everyone.
Thank you.
Thank you.